Welcome everyone to the Kendall Report. Remember to subscribe, like, and share these videos and hit that notification bell so you'll know when I post my videos. Before we get going tonight, I just want to redirect you again to this link, kendallreport.com/indicators. These indicators are what I use every night. We're offering them on TradingView now, so you can get those and use them. I'm going to train you because we're giving you a 50% discount. Basically, the trading room is $297, the indicators are $297. You buy either one of them and we'll give you the indicators, or you can buy the indicators and we'll give you free access to the trading room. That's where I teach you how to use them. We do trade setups, all types of information comes out of those meetings, and you get a full month. So I hope to see you there. Okay, folks, before we get into tonight, I also want to make one last announcement that I am doing a live stream for the Fed tomorrow. I'm not going to be doing our usual trading room. I'm going to do the live stream coming in at 1:30, so there'll be a 2.5-hour live stream at 1:30 Eastern time. We'll go through, watch the Fed reaction, set up, do some deep analysis. We'll go through a lot of the indicators and using the TradingView indicators as well. So it'll be somewhat of an insight into a lot of things that we do in the live trading room. But this is going to be a significant meeting that we're going to watch today. So make sure you show up. I'll probably have a chance to, at the end, to go through some of your ideas and things that you might want me to cover as far as individual stocks. So make sure you show up. Haven't done one of these for many months, so look forward to seeing you there. Well, folks, let's talk about what happened yesterday. We did see some follow through on the markets from the standpoint of the S&P was up 0.48, Nasdaq up 0.22, and the Russell was up 0.85. So it was a pretty good day in the Russell. The problem that we're having here, and we're coming into quite a bit of headwinds from a technical viewpoint. I'll go through all the details here in a few minutes. Shouldn't take long for me to get through this video tonight, and I'll do much more in depth tomorrow on the live stream, so you can also watch that replay once that is done tomorrow. But the point is that we're not seeing an acceleration here. You know, you think we got 2 days up, we got the reversal day, a follow through on the upside, and you would think, hey, we're turning the corner. Well, that's not likely to happen, especially since Jim Cramer's telling you to buy the dips now. If you don't buy the dip, you're going to miss out. I don't think I'd get quite that excited here. There could be some more upside in the short term, but for the most part, we're seeing a lot of resistance coming down today. So a couple things outside of the Fed meeting, which I'll discuss here a little bit, expectation, but we have plenty of time to talk about tomorrow in the live stream. But we got earnings. We have 419 earnings coming out. We saw this is going to be really focused again on some of the oils, the banks, and all that. We're seeing an incredible increasing credit risk coming into the banks all of a sudden. So we thought these higher rates were going to help the banks. Well, they're not really helping them. And so there's just a mixed picture coming out here. And we're probably have never been, maybe that's an overstatement, but we haven't been in this type of position for a while as far as the markets go, and the uncertainty and all the overhang of the markets itself from the standpoint of market sentiment, and just about everything that could be going wrong is going wrong. You know, we're seeing leaks now in the Supreme Court. I've never heard of that. You know, I'm almost 70 years old. I never remember hearing anything happen like this. And everything that seems to be going on seems to be happening in this window of time in the last couple of years. So I don't know what to say about it other than the markets are really unnerved just about everything. So the other thing that I am putting out there right now is I'm on a recession watch. We saw a negative quarter in the first quarter of this year. We'll get some updates before we get to the end of this quarter, but it's starting to look more and more like we're going to get a recession. And I'll talk about some of the details here in the 10-year as well. But there's just a lot going on. As you know, I won't be covering the database. I will go on Twitter and put out what the database output is. It'll be out here shortly, but this is another pre-recorded video. So watch the Twitter account. If you're not following me on Twitter, that's Twitter. That's at Portfolio Expert, and there's no E in expert, just portfolio with an X pert on the end, right? XPERT. So I look forward to seeing you there and communicating you on the Twitter account. So let's go ahead and let's get into the S&P. So as we look at the S&P, as I mentioned yesterday, we got the reversal, we got some follow through. The big number that's coming into this market right now is this 10-period moving average. You can see the PPM is flattened out, but it's at a minus 0.66, and this is a serious number. This suggests there's only about a 20% probability to get above this 10-period moving average, and right now it's at 4220. Tomorrow, not tomorrow, but on Thursday, it will be 4,200, just a little bit below. It's dropping about 28 handles per day. And that number is going to be the cap in this market for right now. It's also the inverse pattern that I talk to you folks about all the time, that rising 10-day moving average through the market grid. Well, this is the declining 10 moving average, and especially with the PPM at a 0.66. Anything over 0.25 is a downtrend. That's a minus 0.25 is a downtrend, and we're not seeing any acceleration or change or crossing over the first and second derivative. Who knows what type of news we'll have tomorrow, what kind of volatility we'll get, but right now the technicals suggest we should be able to hold this number. Next market I'll cover is Nasdaq. Nasdaq, same setup. We're a lot closer there. The 10-period moving average 13,222. So far, we've had a high of 13,135. We look at the values of the market grid. R1 is 13,181. So that's likely to be an R1 at a minimum of an S1, but most likely we're going to see an S2. It looks like a downward bias. We may be able to follow through. If that's the case, then R2 is likely to be the higher end of the range. As I'm telling you right now, there's going to be, I think, quite a bit of volatility. So we could have an S2, R2 tomorrow. I don't know that we're going to get this big move up well above this 10-period moving average in this position. We're also down 0.66 here, 0.7 on the PPM2. So there's a lot of overhanging resistance in this market. So look for volatility to be kicked up. I'll be with you tomorrow, so just show up at the live stream and we'll discuss it in more detail then. Next market is Russel. As I mentioned, Russel had a better day. We were up 0.85 on the Russel cash. We're also coming into that 10-period moving average, 1926. This is the cash, so it is dropping about 25 handles, can be right at 1900. We look at the R1 as 1897. R1, R2 is going to be the absolute ceiling for this today. Probably an S2. I think there's going to be a bit of a rejection off these levels. You look at the PPMs here, and the PPM is accelerating, and nothing's changed. Even if I come over here and I put the RTX up so we can get a feel for what's going on overnight. Right now we're up 0.26 on the session. We're just looking at, we're right on that number. Here's 1909, the high 1901. So we are seeing a little bit of a bias to the upside, but I do expect to see that rejected. Meanwhile, the PPMs are not accelerating, not responding to these higher prices. So we're looking like there's going to be a ton of overhead resistance. It's possible to trade up to maybe R2 1923 just in some volatility spike. But as I said, just join me on the live stream tomorrow and we'll go into more depth. But overall, these markets are all pointing lower right now with extreme overhead resistance. Next market I'll cover is the 10-year. The 10-year, this is the daily. We continued, as I mentioned last night, we get this new Fibonacci objectives. 3.36 is the min, but we're not seeing acceleration. I think we're going to stall here. We're probably likely to stay above the 10-period moving average, 2.87. We finished at 2.96, so we'll call it 2.9. We'll see what kind of reaction we get here, but right now it's looking like bonds may actually come back in a little bit from here, and that we're going to stall around this 3% level. I don't think we go up to these upper levels just yet, as far as 3.3 or 3.25, which was the taper tantrum high. I don't think we get to that level, but we are seeing the PPMs kind of stalling here, but there's still an underlying tone, a very strong, especially PPM 1 and 3. They're at 101, 1.01, and 1.21, which is very strong, but they're way down at these lower levels at we'll call it 2.8, 2.85. I don't see us getting much under those levels in this particular configuration. Quick look at the yield curve, and yield curve did flatten yesterday, and this will be the key thing that we'll be watching tomorrow, is how the 530s act. And right now we finished at 0.03, basically flat, and so we're right at the edge of inverting, and I think it's going to be interesting as we come into today to see what the Fed talks about, whether we're going to get the 50 basis points. I'm sure we're going to get that because they want to be totally transparent. Are they going to indicate a 0.75? I doubt that. They need to be doing probably 1% every meeting, but they're not going to do that. But the potential for a dovish surprise, I don't see it being that real at this time, but I think they're going to have to stay a hard line because inflation is what they have to beat. And they're not able to play any other games right now. There's only a couple buttons they can push. Neither one of them are any good. We're also going to hear about the Fed starting to downsize the balance sheet and starting to run off, and that's not going to be positive at all. So we'll see how it all sets up. Like I said, join me for the live stream tomorrow. We'll go through all the details. Next market we'll cover here is crude oil. This is a daily crude. We're just continuing to hover in this sideways range. The overnight low is 103 to 103.30 to 103.72, so very quiet. Yesterday we did see some downside, but we saw the XLE and some of the stocks really kick in, and I've been talking about this from the energy sector, that I still see this as a positive place to be. And as long as we stay above 96 bucks, these energy stocks are going to do really good. And the probabilities of that is substantial, in my opinion. So we're looking at right now yesterday we got down to 102.40, had a 105.80, 96, 106. That's the story I've been telling you for a while. We continue to look that way. We'll look at the weeklies real quick here. And weekly's got that rising 10 pattern in here. I think we're still going to want to stay. So far with S2 is 98, S1 101.80. So we basically have been just a touch under S1. Maybe we print an S2 down to 98, and R1 is 107.58. So the absolute worst case on a weekly basis is probably going to be R1. S2 would be the maximum on the downside. Next market we'll look at here is the gold market. This is the weekly gold. We continue to be under pressure. This is the chart I'm beginning to hate. We're seeing all the PPMs roll over. PPM 1 is at a minus 0.12, PPM 2, 0.20, 0.05. This whole market is very vulnerable to a further move down. And if it breaks below the 40-period moving average on a weekly, which is 1845, then you're probably looking at a big decline down to low 1700s, the potential going down to the 200-week moving average in this pattern. It's starting to get pretty ugly, especially with the way the formation of the PPMs are in this position. Final market I'll cover tonight is Bitcoin. Bitcoin is under pressure. We're seeing a down 2%, 37,715. We continue, this is a weekly chart. We continue to drift, but PPM1 is flat, PPM2 is negative substantially, and that resistance that we have overhead right now, 41.5, 41.7 is major resistance. Of course, that's a ways away from where we're trading right now. Let's go over to the daily just so we can get a better handle on the short term. So there is some ominous patterns that are emerging. We do have a downside objective here, Fibonacci, that's still valid, and that is for a move down to 33,345. The break on this, and I talked about this the other night, will be around where we're trading right now, 37.7, but down at 37.2. We break below that number, we're likely to see this acceleration to the downside. Well, folks, this is going to complete the video tonight. I'm keeping it very brief so I can get you set up for the openings tomorrow. But I will see you at the live stream tomorrow at 1:30 Eastern Time on Wednesday, so don't miss it. We're going to go through a lot of deep dives on analysis of what's going on after hearing what the Fed's doing and all of that. So look forward to spending time with you folks tomorrow. Have a great evening. Good luck trading, and I'll see you at 1:30.